GM. GM. So here we go. Said a couple of things last month that I want to revisit. Bitcoin would be stuck between 40 and 45k because of options expiry, which ended on Friday, the 29th. After that, there would be nothing to stop it going to either 40 or 45. But the market was bullish, obviously, with ETFs, and it's very unlikely it would go lower. We are just in a really strong uptrend, as you can see by all measurable metrics. Extremely strong. And the other thing was that we would pump right on January the 1st. What do we do? January 1st, straight pump. January 2nd, we're pumping again. The reason for that was logically very obvious, at least to me, and I do have the benefit of a lot of experience. But I hope you understand the logic behind it and use that and apply it in future. That whenever somebody's thinking, we go into a halving year and Bitcoin always goes up at least 100% in a halving year, in a typical halving year, then doesn't it make sense to just buy as soon as the yearly candle opens, because you will never get another chance, or you may never get another chance to buy at that level. Make sense? We say, yeah, but why not just buy the first dip of the year? I saw loads of people saying that. They said, buy the first dip in January. Cool. Well, you've just missed 7%. And the way Bitcoin goes is that often it can do all of this first and go up 10 or 15% and then come all the way back. And then by the time you get the first dip, you don't actually want to buy it because it's probably going to go lower. So it's like, depends on your approach, your time frame, what you're looking at, what way you trade. And this wasn't that wasn't a call, although I am trading it. I am long, obviously. Based on that, I'm actually long based on the 4-hour 200 EMA. Remember I talked about this as well? So I'm not patting myself on the back here. It's because really it seemed very, very, very obvious to me. But there was loads of FUD and lots of people online being very negative about Bitcoin, whenever all it was doing was following this 4-hour trend beautifully all the way since October. Pulled back to the 50, held the 50, made a new high, respected the EMA. Pulled back again to the 100, held the 100 once, twice, three, and used it for rising higher lows in accumulation. Went to a new high, pulled back, consolidated for a month around the 50 and the 100. And I mentioned the first touch of the 200 should give us new highs, because the 200 is the even stronger support, at least in a trend, because that's a level that hasn't been touched. So all that liquidity, all those buyers who want to buy the 200, they've got their chance. And we tapped it, retested it, boom, away we go. Now, from here, I don't know what happens, but a lot of people are expecting a pullback here. And it makes sense, right? You're like, whenever you sit, and this is the nature of, this is the nature of recency bias. So when we sat here, right, for like 3-4 weeks, as soon as it broke out, everyone was waiting to fade it. Like, oh yeah, no, just one more dip back. I'm just going to sweep out these lows. It's not how the market works, right? Sat here now for 3.5 weeks, consolidating with attempts to push lower. Liquidity grabbed, 200 hit, and then we push up and break out. And the thing I see is, it's a trap. We're going down. Or it's a trap, we're going to sweep and then go higher. I don't think so. I think this is just going to go. It's just going to keep going. It might pull back, don't get me wrong. Like, I wouldn't long here on a short-term basis. Right? If I was going to long this, I would be looking for a pullback into the 1-hour 50, right, here. After this breakout, if it pulls back and false breakouts, but holds the 1-hour 50 EMA and starts to push up, that's where I would expect it to move. right? Like a quick fake out to trap people back below. But there's people saying that like this is somehow bearish. You're fucking insane. How is it bearish? How is it bearish for Bitcoin to lead? How is it bearish for Bitcoin, as you see with total? Total is up 1.9. Total 2 is up 1.2. Total 3 is up 1.07. How is it bearish for Bitcoin to lead? How is it bearish for Bitcoin dominance to rally? How is it bearish for ETH BTC to fucking nuke? That's not bearish. This is a Bitcoin rally. It's not just a Bitcoin rally. It's a Bitcoin rally on the week of ETF approvals. So no, it's not bearish. What comes next could be bearish, right? As in, after the ETF approval or after that hype dies down, we might end up retracing all this. Like, I've no doubt that we're going to have a pullback, but I've also no doubt that it's probably going to be after the ETF, right? Not before. It doesn't make sense. So that's what I'm looking at. And so then we want to look at the drivers of this. So open interest, look at across different exchanges. So Binance, OI has ramped up. BitMEX is actually down, so they got squeezed out. Bybit, up. CME. It was CME who pushed this. So if you'll notice, Binance is more steady, but has added the most OI near the top. Bybit was kind of steady and then added a lot of OI at the top. CME started pushing early, and big push here. This is a institutional led pump. So CME pumped it along with Spot, which I'll show you in a sec. CME pushed it to 43.7 and then pushed it again to 45. That pushed to get above 45. Now, what definitely came in then was like, you look at Bybit. Bybit added a lot of open interest at the top. Binance added a lot of open interest here at the top, 4.7 up to 4.84. That's about 140 million. Bybit from the top here went about 3.39 to 3.5 pretty much, so about another 100. So it's about 250 million or whatever, which is already getting flushed out here. See this? So any dip you're seeing right now is going to be most likely, right? It's going to be CME drove this push. CME and Spot drove this push. And Bybit, Binance, retail apes longed in there. So any dip you see back into this area, if we get it, will be the leverage getting taken out from there. And most likely, the big money will step back in again to support the level they pushed to. So a dip would be a buy if I was a low time frame trader on this. I don't think there's any point trading this low time frame because you just get needlessly chopped up and squeezed out. Should be long. I mean, if you're a trader, you should be long from a lot lower. There's ample opportunity. The reason why this will pull back here and give short-term pain is because every single person had 3.5 weeks to buy. So why didn't they? Why is somebody buying here? They're not a good trader. They can't be. Cannot be if they're buying there. Because they had 3.5 weeks to buy, but they were probably too scared. They were too fearful, and now they're FOMOing, right? And so, of course, there's going to be volatility. They're going to get chopped to pieces, and they should. They deserve to. So, but what that will generally lead to is not this, right? That is a possibility, but it's unlikely. It's more likely just this, just violent chop. And then the violent chop dies down, and then it moves up. I actually don't think we go much higher in the short term, unless there's like a pre-approval announcement or something. I think we go really choppy, down, up, for 2-3 days, just to really fuck people's heads up. And then we go higher. Bit like this, but even more volatile. And so in that time, I think ETH can probably run, but I'll talk about ETH and Solana in trade of the day. So we'll look at CBDs here, spot, stablecoin, coin margin. And you can see really clearly how this move was led by spot, right? Everything pushed up. The first push was mostly stablecoin futures, but then spot came in with a really strong push along with the CME futures, which is not spot, right? To push us even higher. Spot bid has remained high, futures, and then coin margin starts to add in there. That's not, like I say, with CVD, you don't want to overanalyze CVD because it's only partial information. What matters is who's pushing on the key legs, right? Because if the price is going up, the CVDs are obviously going to broadly be going up. But you can see clearly that not everyone is equal. First push was stablecoin futures, coin futures and spot were flat, relatively. Second push was definitely dominated by spot. Stablecoin futures were pushing too. Coin futures were not moving. Then coin futures have started to add, and price has not respected it. Whereas stablecoin's gone sideways, spot's gone sideways. So ask yourself, who's wrong here? The coin margin guys are obviously wrong in terms of the buying pressure from coin margin has not been met with upwards moving price. Why would coin margin be buying? Probably hedges closing or people trying to long their longs. So all of that is to say, it means absolutely nothing for where price is going to go next. It's just a good insight into what got us here. So it was largely a spot-led move with the CME futures leading, but then we got Bybit and Binance aping in with leverage at the top. So bracket it and break it out into two sections, right? Let's just say broadly up to here, that was led by spot. Everything up here is futures aping, right? So you got futures aping at the top, you got spot pushing on the way up. So if we go back into the spot zone, expect the spot guys to buy again. But they'll buy as low as possible. Now, if we get a deeper pullback, which you absolutely can, looking down there, if we end up flushing them out, the spot guys will want to buy as low as possible. Back into this area. Before ETFs, you're 100% expecting new support to come in. So that's a little breakdown of the move, where we're sitting at. It's all looking fine. We'll see what happens now over the coming days. GM.